Today's CPI data was supposed to break the tie, but instead it deepened the split because while headline inflation cooled, the stuff that actually costs you just won't let go. Let's back up. Last week, the New York Fed's July survey showed that consumers expect 2.9% inflation over the next 5 years. That's the highest expectation that they have showed since March. Now, why does that matter? It matters because it means that their purchasing decisions are being impacted by an expectation that inflation is not under control. In fact, they tell us in polls over and over again, they think inflation is still here. Meanwhile, Trump loyalists, especially Chris Waller and Michelle Bowman, who are two governors inside the Fed, argued that soft jobs data justified rate cuts. Michelle Bowman is on the record for saying that data justifies 3 rate cuts in the balance of the year. Now, the CPI data was supposed to be the tiebreaker because the two main measures that the Fed responds to, inflation on the one hand and unemployment on the other. Inflation being a reliable measure for when the economy is too hot, and unemployment ticking up being an indicator that the economy needs stimulation. Now, those who watched this show last week when we reviewed the ISM data will know that we're in dangerous territory because we may very well be in a time when price inflation is going to be sticky at the same time as the labor market is feeling the crunch. That's what we call stagflation. And today's CPI number, which while the headline CPI number came in a little cooler than expected, core CPI, which abstracts out food costs and energy costs because they're super volatile and therefore gives you hopefully a more realistic view of systemic inflation, came in a touch hot. And super core, which basically focuses on the services economy, came in at 0.5% month over month, annualized to about 3.2% year over year. The Fed targets 2%, but 3%, 3.2%, if that's the real inflation in the economy, the Fed is going to have a very hard time cutting those rates. Now, it's worth mentioning that this data from the services sector echoes ISM data that we got last week, which showed prices to be at their highest level since the heat of the Biden era inflation shock.